Right, for Bandhan Bank for Q1 FY27, the financials were a mixed bag, but the real disappointment it came in from the management commentary and a sharp cut in their profitability guidance. But let's start with the positives first. Company's loan growth it remained healthy at 16% and driven by continued strength in both their secured as well as the non-EEB portfolio, with their asset quality improving and also the credit cost declining to 1.8%. The bank also continued to strengthen its diversification strategy, with the non-EEB portfolio now contributing nearly two-thirds of its total advances. But there were actually several spots on the weaker side for this quarter. Deposits they just grew by 7% yearly, significantly lagging the advances growth. Even though the bank attributed this to a conscious reduction in their bulk deposits, margins they remained flat at 6.2%, failing to improve despite the changing in the loan mix as rising funding cost that particular part offset the benefits. Operating expenses jumped nearly 19% yearly due to higher technology investments and a one-off gratuity provision, while the other income also declined because of the weaker treasury gains as well as the lower recovery income for this quarter, which the management has guided to improve in the Q2 and going onwards. The biggest negative, however, was the management's outlook for FY27. The bank maintained its FY27 loan growth guidance at around 14%, but slashed its profitability expectations. Earlier, management was targeting an exit ROA of nearly 1.6 to 1.8% by FY27. That has now been cut to 1.2 to 1.4%, and at the same time, the earlier expansion of NIM guidance that has been abandoned as of now, with management now saying that simply maintaining the current 6.2% itself would be a great achievement for Bandhan Bank. So overall, while the balance sheet it continues to improve and the business transformation it remains on track, the sharp guidance cut for ROA and that range bound, that particular NIMS guidance, that remains the near-term earnings outlook a dampening effect, and quarter can be best described as operationally stable, but the weaker commentary that will actually weigh heavy on the stock's reaction as we move forward.